please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
At least in pre-opening rates, as is the Bank Nifty. Okay, opening bell is just short of 10,200, 10,198. Oh, now 10,200 for a brief second. So 30 points higher is where we should take it, about 0.3% higher. Sensex as well 0.3% higher, that's about 95 points. 33,043 is where that index has opened. Bank Nifty is ahead of both these indices. It's up 0.407 up, 25,162, 160 thereabouts. And the mid caps are definitely sharply higher than the big boys. Okay, what's doing well in the Nifty itself? Tata Motors is the one that's getting some boost from the JLR sales, and then are the Nifty Bank stocks. Axis Bank is the one that's leading the charge, though ICICI Bank is not far behind, not even Kotak Mahindra Bank, that's also up about 0.5%. Auto stocks getting a good traction today, other than Tata Motors. Bajaj Auto up among the gainers. Bosch has continuing to have a very good day, 1% higher at the open. And then you can go back to the Bajaj Finance, GAIL, all of them. GAIL, of course, continuing with a good run. Bajaj Finance seeing buying today at lower levels. IndusInd Bank has joined the list of gainers. But nothing is a runaway gain. The maximum you have is about a 1% gain. And among those that are falling, Bharti Infratel once again a 1% downtick. And then there's Lupin, Eicher, Tech Mahindra, Ambuja, HPCL, NTPC. But these are minor losses, 0.3, 0.4 thereabouts. So it's, I guess, 43 out of 50 in the green. But all said-it winners, not ultra winners.
Okay, well, the mid-cap index is looking good this morning, so up almost about 0.6%. The market breadth is solid at 5:1 in favor of the advances. Future Consumer is really your stock of the moment, 10% higher now on that stock. Picking up some more pace after that Morgan Stanley initiation has come through. So take a look at that. Shriram EPC is up almost 18% this morning. It's a small ticket stock, 24 rupees. So, you know, it looks large, the kind of move, 18%. But nevertheless, the volumes are also picking up on Shriram EPC. You have a couple of stocks that are hitting new highs today, new 52-week highs, all-time highs. Britannia is one such. It's hit a new high this morning, so keep an eye out on that. TVS Motor is the other one. It's been making new highs for the last many days. And today TVS Motor is sitting at a fresh high of 757. Imami has entered into the online male grooming space with an acquisition. So that stock is up almost about 2% or so. You have a buy call coming in on Bharti Airtel from Goldman Sachs. So that is in the green, up almost about 1%. Take a look at Escorts. HSBC has initiated coverage there. So Escorts once again has come back into the fancy of investors, up almost about 2%. And on the downside, you have Jet Airways, I guess. I didn't check how that has opened, but I guess that's in the...
are the ones that are down.
There you have it, 3.5% lower. Indian Hume Pipes is another one. I think it reported its earnings. They were weak, so that stock too is down and out this morning. But Anuj, the stock of the moment is Future Consumers. Big rally there.
Yeah, Future Consumer, of course, is driven by brokerage. But I think for me, the stock to track is Escorts because, you know, Sonia, it's Escorts and UPL are two stocks which are coming out of a mini bear market after a strong bull market, and I think on that we had a sort of a breakaway gap. So for me, that you know, would be the two stocks to watch. Escorts, in fact, now surging, so 681 on that stock.
I think you started tracking Escorts closely from 200,
120,
right?
120. But you know, that of course was 2 years back. But it's a good opening for the market, Sonia. You know, 155 point higher. As we expected, the Bank Nifty should have, you know, caught up because yesterday was weekly options expiry that sort of dragged the market or the Bank Nifty. Ashwani, thoughts on the market opening? It's only inching higher on the Bank Nifty.
See, it's according to expectation, and I think today HDFC Bank will probably fulfill its promise of yesterday. So ICICI Bank, HDFC Bank, State Bank, all of them are firing. So this is the index to chase. I think within an hour you should be up 250, 260 on the Bank Nifty. Now there is no doubt that the market has bottomed out. So if somebody is still short, not long, I think even now you can enter into those positions because it's clear that the way the market is open, you could have another good day. At least the first half could be good. Okay. As far as individual stocks are concerned, Future Consumer, even at 9-10%, you should go ahead and buy. This is breakaway gap. It'll show follow through. Also, things like escorts could do well. So get on with the financials and a few of the mid caps which are breaking out of consolidation.
On escorts, Ashwani in particular, what would be the next levels to watch? And also your call on Jet?
See, Jet Airways is in a strong trend, so I don't know how it's opened. If it's opened on a decline, you should buy it.
Minus 3%.
And escorts, I think you should see further upside, probably back towards 750, 760.
Okay, well, I just want to mention that Shriram EPC is now up almost 20%. They just announced their numbers, and the numbers look pretty good this time. It's actually a profit of 2.5 crores versus a loss of 22 crores last time around. So that's the reason why Shriram EPC is up and about this morning.
Absolutely, at 18%, yeah, doing exceptional. Of course, to be fair, the price is such that it could be. It's just the base that's keeping it high. The stock of the morning actually is Future Consumer, now up 12%, and as Ashwani was saying, he would still go ahead and buy. UPL, the other stock that Anuj mentioned, also coming out of a bear market, is up. Actually, it's the biggest gainer in the Nifty at this point in time. Yeah. Mitesh, sorry, you wanted to say that?
No, I just wanted to look at NCC as well, Latha. So clearly this is a market where you're seeing the stocks which have got beaten down or which have corrected but earlier were in strong uptrend, they are beginning to make a move.
Okay, I just wanted to ask Mitesh, anything on UPL itself or any other stock?
See, Mindtree and Dabur are two stocks, Latha, which have given a fresh breakout. I think Dabur after a long time has recaptured 350 odd levels. I think that could do very well. And Mindtree is something which I like on the longer term charts as well. We had a buy call today and I think it's showing good follow through today.
Okay. Gentlemen, thank you very much for taking us through the early morning trades. Prakash, Meherbun, Ashwani and Mitesh, thank you for taking us to the first few minutes of trading as well. And we will touch base with our tech gurus yet again at 10 a.m. to get their 10 a.m. trades. It's a very strong start for the market. 0.5% higher at this point in time, 10,220. And it's the Nifty Bank that's really reaching out with a 210 point order, almost a 1%, 0.8% gain.
Oh yes, 53 points higher on the Nifty, and the Bank Nifty 204 points higher, 25,260 is what we have. Andrew Holland now joins us, CEO of Avendus Capital Alternate Strategies. Andrew, good morning. Always good to have you on the show. Of course, this has been the week in which we've been celebrating our 18th birthday, and you have been there for the better part of those 18 years. So thanks a lot for that. Your thoughts on the way the market has bounced over the last couple of days? Are you sensing that once again the correction was shallow in nature and we are moving on?
Yeah, it seems to be that way. It seems to be that way each time the market's going to take any kind of knock, and we'll continue to see this until something gives. But I've been saying it for some time. I'll say it finally again: is that I'll wait for the Fed, see if they're hawkish or dovish, and what that does to the bond markets, because that's where I see the turmoil is in the bond markets, and that would finally kind of come through to the equity markets. But I will see how that plays out over the next week or so. But one of the things that I am more excited about is obviously, the tax reforms that got passed in the US, and I suspect what we're going to see now is that other countries take that lead as well and try and reduce the tax rates for corporates as well as personal tax rates as well. So that, I think, will give that extra fillip to global growth, and GDP growth for the world should be touching 4% next year. So that's a backdrop which we kind of go into 2018, notwithstanding my kind of long concerns or concerns over liquidity-driven markets. But that will be short-term pain that will happen. But the longer-term outlook, or mid to long-term outlook, looks very very promising from where I'm standing.
Okay. Andrew, good morning. Good to have you with us, especially on our birthday week, as Anuj said. Thank you for joining us this week in particular. While the markets are cheering now, notching up highs or, just taking one step backward and two steps forward, are you changing the nature of stocks that you are taking exposure to? Is there more interest in, for instance, infrastructure stocks, or corporate lenders? Are you moving away from the old favorites of consumer stocks?
No, we're keeping to where we think is going to longer term make us money anyway. You know, there's always going to be rotation and expectations that certain beaten down sectors will have their day, and they do, and we've seen that. But fundamentally, not convinced I need to be in that space yet. I'm quite happy to miss out a little bit now, or quite a lot now in some cases, when I feel more convinced that the fundamentals are there. You know, listen, I think the economy next year will pick up quite smartly, and for the first time we're saying that we expect earnings growth of maybe around 15% in 2018-19. You know, we're getting signs now from corporates a little bit, getting a little bit more kind of positive that things are starting to at least kind of get a little bit better from where we were after GST. So, but it's not all sectors. It's quite an increasing number of sectors now. So I think the rebound in earnings next year should be quite strong. And for the first time after 4 years, maybe we'll see some earnings growth.
Andrew, hi, good morning. So are we looking at nascent signs of a capex cycle recovery perhaps, and would that mean some of these beaten down sectors, infrastructure, real estate, not so beaten down anymore, but would they start to pick up?
So I don't think the capex cycle is anywhere near starting. Capacity utilization still remains around that 65 to 70. But as the economy does pick up in 18 and 19, I suspect 19 was when you'll see the capex cycle start. So I still think we're a good 18 to 24 months away from that. So that's why I'm not so gung-ho about kind of capital goods, infrastructure stocks. Although I do feel obviously that the government will make some push in the rural areas towards infrastructure, so that will keep those stocks going quite well. As regards the banking sector, which is obviously the flavour at the moment, I'm still not convinced about PSU banks. I'm not sure why banks would apply for their own other banks' QIPs. That's kind of got my head scratching again. I'm going to stick to the private banks for the time being and await for the recapitalisation details to come through, given what the RBI said in terms of how they would, distribute the monies.
Okay, banks and NBFC clearly is the theme of the day today. Just take a look at the intraday chart of Piramal Enterprises. This is a stock which is corrected about 15% from its highs, and over the last 2 or 3 days there's been a big bounce on that one, and that stock is now breaking out. So clearly there's a lot of buying which is happening in some of these NBFCs. Andrew, of course you haven't been a big fan of NBFCs except for a couple of housing finance companies, if I'm not wrong. Would you sort of maintain that kind of view?
Yeah, no, we're keeping. We think the housing finance companies is where we want to be in the longer term space. So, really the fund that we do, Anuj, we can actually be a little bit more flexible in the short term as well. So it's not as though NBFCs is off our radar. We can take positions there, but it's not fundamentally core where we want to be at the moment. We think valuations are pretty okay. But we'd like to see them a lot cheaper before we want to take a more kind of longer term view on them.
Okay. Well, then, among the others, there are the gas stocks that are doing very well. That's been the toast of the market, actually. Are those some of the stocks that excite you?
Yeah, Latha, I think we're going through one of those. If I listen to just today, you're saying some beaten down stocks will kind of move up, and this is what happens when it's rotational. It's not as though anything's changed in that sector to my mind to get any more bullish or any more negative on it. So you just have to live with those rotational kind of moves in the markets and not either get too swayed by it one way or the other. So stick to where we like, and our sectors will have their days too in these kind of markets.
Not excited by PSU banks yet?
I wish I could be. I just I'll wait for the details of recapitalisation, but nothing's changed in terms of how they're run or who's running them. So Let's give the benefit of the doubt that maybe they'll do better next time around. But it all goes back to what kind of haircuts they might take on their kind of distressed assets, and I suspect it won't be enough to really get that market moving. So there's a lot of after a kind of excitement, I think we're back to the fundamentals, and the fundamentals still don't look great for PSU banks. And I think the QIPs, whilst they're coming out, I think they've been struggling on price. I mean, there's not that many takers of these QIPs.
So, in effect, what kind of gains do you see for the market in 2018, Andrew? I mean, we've seen an almost healthy 25 to 30% gain on the Nifty this year. Do you see an encore?
Yeah, I do. I think that from where I'm thinking that despite my more short-term negative views on global liquidity, that the market should move in line with earnings growth. So another 15% from where we are in the next 1 year would be where I could think markets could move to.
In your alternative funds, your arbitrage funds, where would you be short on at this point?
It's a very good question, and it's a very difficult, kind of strategy to manage when you have, rotation in certain sectors. But obviously, there's certain companies or sectors which, even though they have their days, ultimately will kind of come down or won't move as much as your strong sectors. So it's more hedging than it is. I'm saying that these share prices are going to fall. So that's how we manage it.
Okay. Finally, Andrew, in terms of global cues, of course, we've only spoken about Bitcoin for the last 3 days, but in general, what's been your view? Do you see this market showing some signs of fatigue globally, this rally?
Anuj, I've been expecting this for the last 3 to 4 months, as you know, that there's liquidity-driven markets and something negative that will burst the bubble. It just doesn't seem to happen. I still think if it's going to happen, it's going to happen in the bond markets, and that'll spread through to the equity markets. Interest rates are going up, global bond yields are going up, the dollar's getting stronger. Something has to give somewhere. But unfortunately, you can't get the timing. So that's why I think in the next 2 months, either this will play out or, completely wrong in my thinking.
Yes, on the bond markets is where the eruption could come. I mean, we have to watch the markets closely. Thank you very much, Andrew Holland, for joining us, especially in this week when we are celebrating our 18th birthday, putting our feet into adulthood, as it were. Well, it's time now to get to a story which one of our reporters has been following. What we hear is that in their investigation of how quarterly earnings of companies are getting leaked ahead of their earnings announcement on WhatsApp and other social media, both the stock exchanges and SEBI are now shifting their attention from who might be circulating the information to the companies whose earnings are being leaked. Yash Jain, our correspondent who has been tracking this story and has broken this story for us, is with us. Yash, what exactly are they going after the companies?
Well, as you rightly pointed out, this pertains to market regulator SEBI's investigation on complaints of individuals who are spreading unpublished price-sensitive information of some of the listed companies through WhatsApp, text messages and various other mediums. Now, intensifying the investigation there, what we're given to understand is that India's largest stock exchange, NSE, has made a list of some of the most important listed companies where some unpublished price-sensitive information has been floating, doing the rounds through WhatsApps, SMS and various other social media platforms. We are given to understand that this particular list will be shared with market regulator SEBI very soon. I did ask my source on the name of these important companies, but he did not disclose that, but he said that these are some of the very important listed companies. Now, essentially what we are given to understand, the whole intention behind submitting this list with market regulator SEBI is that because the NSE in consultation with SEBI wants to mandate these listed companies to come out with a clarification every time they come across any such unpublished price sensitive information which is doing the rounds of the market, because NSE believes that most of these companies are aware about such activities and some action needs to be taken against these news which goes around in the market. We've written to NSE and market regulator SEBI on our story, but we are yet to receive a reply from both the parties.
Okay, Yash, thanks for that very important story there. We'll keep coming back to you for more. But moving on, the markets are doing well, so let's get you a couple of big voices in various sectors. Best in the automobile sector is yet to come. That's the word coming in from Suresh Krishna, the chairman and managing director of Sundaram Fasteners. In an exclusive chat with Latha Venkatesh, he adds that they will become a $1 billion company very soon. Here's an excerpt of that exclusive conversation.
Well, first tell us, which is the best part? You have grown with the Indian industry, with the Indian automobile industry. Which is the best growth period, or is the best yet to come?
In my opinion, the automotive industry is a very huge sunrise industry in India. We hardly produce 3 million vehicles, cars, 3 million cars in India. And in my opinion, India can easily absorb anywhere about 12 to 14 million cars. We make about 16 million motorcycles or two-wheelers. I think India can absorb about 50 to 60 million two-wheelers. Same thing goes for trucks. When the infrastructure really kicks in, infrastructure building really kicks in India, I think more and more trucks will be needed. When the public transport becomes more prevalent, more and more buses will be needed. So in my opinion, we just started, but the inflection point of India, automotive industry, I think came with the introduction of Maruti. I think Maruti really changed the picture of automotive industry in India. And after that, of course, a lot of other people have come in, as they say, rest is history. But India is just starting to exert itself in terms of automotive industry. We got a long way to go, and I think we are in the right position, right country. At this point of time, if you ask me if I have 100 rupees, where would I put the money? I'll put it in India.
Mr. Krishna, right now the group is what, $6.5 billion. In your mind, what would Sundaram Fasteners look like in, say, the next 5 years or next 10 years?
The way automotive industry grows in India, I would say Sundaram Fasteners could easily be looking at $1 billion plus, maybe more. And much of it will come from export, and much of it will come from value-added products rather than basic products, because that's where the world is growing. And I think today we did a survey, only 15% of Sundaram Fasteners products will become obsolete when the electric vehicle comes in. And that 15% can be, I think, substituted by other products, because this is going to take another 10 to 15 years even to reach that kind of 15% figure I told you. By 2030-35, when these products become obsolete, I think Sundaram Fasteners would have moved much ahead, much farther away from these products and substituted them with something much more profitable.
Finally, Mr. Suresh Krishna, what is the succession plan for Sundaram Fasteners? Your daughters are very active in the group, we understand, and are taking initiatives. Take us through the succession plan.
Actually, my eldest daughter is settled in America, and my second daughter runs the entire domestic operations of Sundaram Fasteners. My youngest daughter looks after my China plant, my UK plant, and we have a subsidiary company called Upasana Engineering, which makes cold extruded parts and also parts for the motorcycles. And she also runs the radiator cap plant. And more over and above that, she looks after possible acquisitions. So it is reasonably well balanced, and at some point of time, I'm sure I can fully hand over everything to them. They have been in the company for 10 years now, and they are fully versed in how the company runs and capable. They are both MBAs from Michigan, They've done very well in, as far as education is concerned. Now they also got the required practical experience in Sundram Fasteners. And as long as I'm alive and I'm guiding, and I don't think anything can go wrong.
But how do you see India transforming itself into the electric vehicle space?
If you generally read the prognosis, my reading is that by 2030, only 8% of the vehicles produced in the world will be electric. The inflection point will come in 2040, when it is expected about 30 to 35% or even 40% of the vehicles produced in the world will be electric. The world produces today anywhere between 80 and 90 million vehicles per annum. So you do your maths and you come out with an answer whether it's going to be disruptive or not disruptive. Electric vehicles are here to stay. Just like cars replaced horse-drawn vehicles, electric vehicles will replace IC engines. But how quickly, how soon, where, it's a big question. In India, I think it's going to take slightly longer because we have to build all the infrastructure for the electric vehicles. We do not yet produce lithium-ion batteries. We have to import lithium-ion batteries. So there are so many impediments that India will have to overcome, but eventually it will happen.
Recently, Tesla has partnered with your company where Sundram Fasteners will provide certain products to Tesla. What's the experience there? What brings Tesla to your company?
Tesla is still producing very, very small number of cars, as you know, and they were the pioneers in making really acceptable car in the world. And it so happened that they chose to buy a couple of products from Sundram Fasteners. The number being small, and we treat Tesla as just as another customer. We don't think that the Tesla is going to make earth-shaking difference to Sundram Fasteners because, as I said, they still produce very few number of cars, and they have a long way to go before they catch up. Of course, they have got a huge facility in Nevada for making batteries, which will stand in good stead for them going forward. I wish them all the luck in the EV industry. But for us, at this point of time, Tesla is still just another customer.
Talking specifically about Sundram Fasteners, to your mind, which segments of the group will do better in the years to come?
We take bolts and nuts. It's the most fundamental engineering product you can think of. It's never going to go out of fashion. So we have to be there, and we control a fairly large section of the market. You take cold extrusion, you take powder metallurgy. These are all allied items in which tool making forms a very major part, or what Mr. C.K. Prahlad used to call core competence. That is, Sundram Fasteners' core competence is not really the product, it is the tool making ability which produce the products. But our opinion in the last 10 years is that we have to get into more and more value-added products. We have to move up the value chain. And we have moved up. Like, for example, the transmission plant we have in Maraimale Nagar in Mahindra city has given us a tremendous amount of input in terms of not only managing quality, logistics, everything is exported from there. It is now almost a 500 crore plant. Everything goes to United States mostly. And we have learned a lot. The customers have learned a lot. And customers have come to trust us a lot. And the value addition has really helped. But we are not going to forget our bread and butter. I think bread and butter is very important. The jam comes later. But the jam is also important.
Well, the biggest takeaway for me is, for a legacy, in the Indian legacy is, it would have been Sundram Fasteners and Sons. But this will be the first company which will be Sundram Fasteners and Daughters. And between us, I think only Anuj has that pleasure.
Yeah.
Oh yes, pleasure and privilege actually to have two daughters, Latha.
So far.
Well said.
I think I can be certain of that. But you know, if I can take the liberty, I mean, you know, my daughters have helped me become a better person. I don't know if you know, actually I'm raising my elder daughter, she's raising, me. It's like, just a privilege, of course.
Absolutely. I mean, I take your point that children certainly make us better human beings. Okay, we have to take a break. After that great conversation with Sundaram Fasteners, that entire chat will be available over the weekend and on our website as well. But it was a great lessons in excellence, as I thought.